This is how I usually start the show, but good morning. It is Tuesday, October 22nd, the day of twos. Yesterday was an interesting day, and I do suggest you go back and listen to yesterday's podcast because I honestly thought it was one of my best because it goes in. I got 4 or 5 messages literally from friends right afterwards. Why didn't I buy NVIDIA when it was down 35%? Why didn't I listen to you when you were adding NVIDIA when it was at $100? Why didn't I listen to you when is it too late now? And I got 4 or 5 messages. I'm going to get a ton more messages. What stands out to you in this heat map from yesterday? Is it Amazon up 0.04? No. Is it over here with Target that was down? No. Is it Boeing up 3%? No. It's this big ass green on the left. NVIDIA up 4%. Now, again, I will point this out, and maybe I didn't make this clear. If you are this style of person that saw NVIDIA dip in August and you didn't buy one share, okay? Maybe that's a question you ask yourself, not somebody like me. I was saying buy. I was saying this is an opportunity to buy. When you look at this, and I wasn't all the way down there at 100, but when I said this, between 99 and 122, and we were in that range, you didn't have to buy it on August 5th. You could have bought it here at 118. I bought some at 118. I didn't get out here with an 11% gain because my goal is to add to my position. I said this back, I believe in July, was I wanted to build up my position in NVIDIA to be a larger portion of my portfolio, at least for a year. And so when you ask me, hey, is it too late to invest now that we're at all-time highs? I would argue no. The valuation makes sense. But if you didn't buy down here at 100, why are you buying at 140? And why are you buying at all-time highs? You're chasing. And that's going to be, again, if you're long-term, I don't think the devaluation is worrisome in this one. But it just points out a pattern that will not be sustainable for a good portfolio. Now, if you're just dollar cost averaging into, we talked about, I pointed it out yesterday, the S&P and the triple Qs, they bought NVIDIA in 2001. So if you're chasing NVIDIA and you want to buy NVIDIA, just buy QQQ today. Just buy VOO today. QQQ's not at its all-time high. VOO hit an all-time high, I believe, yesterday, intraday. But again, I think that yesterday's podcast points it out. If this is you wondering that this thing stands out, why don't I have this? If 10 years from now, you're saying, why didn't I buy this stock at this time? Just buy the Qs. Just buy the ETFs. That's your best bet. Because over the next decade, Goldman Sachs thinks the S&P will post an annual return of just 3%. That's down from their estimate of 13%. Well, not their estimate, but down the last 10 years. The S&P is up 13%. Goldman sees a 72% chance that the S&P trails Treasury bonds and a 33% it lags inflation over the next decade. And that's because we are spending so much money in this country. You can't throw out $3 trillion worth of stimulus and not expect some type of casualty. And maybe that's the stock market. But bonds should remain that. Because you know what? If you're gaining 4% in bonds and you're buying them now, then you're probably good. So bonds were what dragged down the market yesterday. And you can see it. Let me see. Right now, we'll just go. We'll just continue on. But bonds were what dragged down the market day, and Goldman Sachs presents its case. Yeah, that's essentially what this one is. So what hit home yesterday with a lot of people as well was me discussing paying a financial advisor 1% versus Alpha Picks. On Friday, just to let you know, and I've got this calendar appointment with my girlfriend, we are going to build a portfolio based on Alpha Picks. So from time to time, what I'm going to do is I'm going to use the tools that I have available to me. But one of the things that I will show you, and I posted this because let's look at this. This is what you see right here, okay? You see hold, strong buy, and then over to the right you see a percentage. When you subscribe to Alpha Picks, this is what they give you. And these are the top 10 percentages of the portfolio that we're going to buy. So this particular name, and again, I can't show you the names. If you want to see the names, you have two choices. You go to Linktree and you can click on this second one and it's bundle up. This one saves you $159, okay? You get Seeking Alpha Premium and Alpha Picks. That's the best deal going. If you want just Alpha Picks, it's $50 off, okay? It's a couple $100 less. I would argue that the bundle is a far better deal. For a couple $100 more, you get Seeking Alpha Premium, which allows you to look at your own thing. But what we're going to do is we're going to go into Trendspider. We're going to take a look at this. You can see this is within Alpha Picks. So you don't need Seeking Alpha Premium to see the rating of the stocks in the Alpha Picks portfolio. But you do need Seeking Alpha Premium to research other stocks that are outside of Alpha Picks. So the ratings in here, you'll see them. The number one holding in the portfolio, it's currently a hold. It's not even a strong buy. The number 2 and 3, they're strong buys. Number 4 and 5, they are holds. And then you get down to all of these have grown into these positions, and they are huge, huge gainers. So if you want to see them, again, you're going to have to sign up for Alpha Picks. But on Friday, I'm going to do that. So for instance, and just to make math easy, for a $10,000 portfolio, okay, this top pick, you're going to buy $864 worth. And where are we doing this? We're doing this in Webull. So go down here and the link right down here, join Webull today and get up to 75 free stocks. It takes you over here. You get 6, 20, or 75 free share stocks. That's where we're setting it up. We're setting it up in Webull. But this one, because Webull allows you to buy fractional shares, we will buy $864 of that top stock. The second one in a $10,000 portfolio. The second one, we will buy $709 worth. The third one, $592. Okay. The fourth one, $459. We will go down and we will buy those. Now, if they're a hold and I go into Trendspider and I see that it's not necessarily a good chart for the short term or, not a good entry for the long term, maybe I'll wait. But that's how I'm going to set up that Alpha Pick portfolio. And remember, all the links here to save are on Linktree. LINK. The link is down below. You can see it on the screen. linktr.ee/dailystockpick. And you can just go and do it. Okay, and if you want Trendspider, if you see the 4-hour algorithm, again, you have 16 hours to get in on this deal. It's $54. We will go over raindrop candles. We will go over the GPT entry, a great benefit of Trendspider. We'll go over Morgan Stanley's top small cap picks, IONQ. We're going to talk about Target. We're going to talk about earnings of GM, Lockheed, Raytheon, Verizon, 3M. We'll go over GE. We'll look at GEV, VST, Tesla, and Apple earnings as well, and then social requests. But just, again, I'm going to build that portfolio. Now, bonds were what dragged down the thing yesterday. We saw that about Goldman Sachs. What I'm keeping an eye on right now is the VIX. And you can see the VIX is down 1.28%. Over 1 month, it's up 20%. So over 1 month, it hasn't been great. Bonds are what's really holding this market back, because you can see at 4.76. Look at how they're kind of tight in this range. 1 month ago, the 2-year was at 3.61. It's now at 4%. And then you look at the 10-year. The 10-year's at 4.1. The 1 month ago, this was at 3.74. So bonds are changing this game. And the narrative, again, that Goldman Sachs is saying is bonds will outpace the market. It is what it is. It is what it is. That's a good guess. I just don't put any validity into it. They have data that, again, these guys have 500 analysts that look at this stuff. It makes sense. It's news. Keep an eye on it. Don't let it change your direction. Don't let it change your direction. So, IONQ last night, which is interesting. Got to shout it. This is Brandon's favorite stock. It is quantum computing. It is a Hail Mary. But look at this. Okay, look at this one. Now, in the 4-hour algorithm, over 24 months, you make 410% trading this. If you just bought it 24 months ago, 179%. Would I buy this one outright? I would not. And the reason is because it's a moonshot. This is something that gets a ton of volume on hype and trades. Your average win on this is 33%. Okay, you only win 36% of the time. So up your win percentage and find better entries. You can create the strategy. How are you going to create the strategy? Well, use the visual scripting with ChatGPT in Trendspider. I will include this link. You can see right here. This is a video of going in. You add GPT condition, type in death cross, and literally it will scan for all the death crosses and the RSI under 50. You're seeing the video. You can go to this and just look at it. And then MACD greater than signal. And that's literally all you do. You don't need a programming background. You do that. And then he's going to scan the NYSE. And it's going to scan. And boom. You see this one and you see everything there that it does. It says, okay, right now on this candle, you're going to have a death cross. You're going to have the RSI under. This is how you scan with ChatGPT in Trendspider. It is a phenomenal, phenomenal tool. And so if you want to find entries in for like IONQ or some of these, you can see on the weekly, the Bollinger Bands are just expanding up. The MACD, it's just crossing the oscillator. The RSI, completely oversold. But again, the 4-hour algorithm, find your algorithm. It was funny. IONQ got a shout out on Kramer last night. He literally said, stay away. He said it's all hype. FYI, my friends, we ride at dawn. Inverse always wins. So Brandon, kudos to you for being in IONQ. High five on that one. It's going to be a good one because Kramer hates it. So if you're inverse, that's a good one. This was a great discussion, okay? It's a little short clip from the compound. It is basically talking about how the market's multiple has gone up. But what nobody talks about is that earnings are growing, which brings the PE down. And so that's how you have a stock that has a high PE like Costco, and it gets brought down as earnings expand. And so if you believe in that growth, that's why the PEG ratio is so important. And this was a great discussion, Now, another chart pattern kind of thing on education. Avoid these. How to identify the downtrend. The upper left is highs and lows. If you have lower lows and lower highs, stay away from it. You can use Fibonacci levels. Go onto YouTube and type in Fibonacci. You can do Fibonacci from a specific space in Trendspider. Support levels. These are previous highs, previous lows, previously where it's trading sideways. You can use those. Channel patterns. We've talked about these kind of trading sideways, but if you have a lower high and a lower low, and the channel pattern is upper left to bottom right, stay away. Flag patterns. If all of a sudden you see it break out and then go down to the right, stay away. If the price is going down but volume's going up, that's divergence. That's not good. Moving averages. If it uses a moving average as a support or resistance, know that. If it's using a moving average as a resistance level and it's on its way down, stay away. Moving average crossover. We talk about the 921 a lot. That's one of my big ones. The 50 and 200. We talk about that. Elliott waves again. You can stay away from these. These aren't hard to learn. These are easy to identify. Super, super simple. Now, NVIDIA. This is another benefit of Trendspider is what's called raindrop charts. After pushing above key trend line resistance, the last 2 weeks had a high concentration of volume at the highs. and a little activity at the lows. This suggests breakout buyers are supporting this move and are willing to do business at higher prices. I will post this chart, okay? I'm not going to change my setup to raindrop candles right now, but raindrop candles are super, 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 and yes, that's 3 supers. It's great, and it's here it is, okay? These are the candlesticks that Trendspider allows you to have, raindrops. I don't use them because on strategies, you can't use raindrop candles. So when I show you my 4-hour algorithm, I can't use raindrop candles. And rather than change back and forth, I just want to show you what raindrop candles are, okay? To the left, you can see this? VWAP. First, see that little line? First half of the period. That's the VWAP, the line. Okay, what this shows you on the left is the volume for the first half of the period. Okay, the actual entire candle shows the low and the high, and on the left, you'll see the VWAP, and you'll also see the middle line on the left. And on the right, you see the volume, okay, as there's more volume on the top, you're going to see that expand out on the top, whether it's at the first half or second half. Neutral, it's going to show a blue candle. And again, bullish is green. Neutral is blue. And bearish is red. It's a raindrop candle. I will include this in the newsletter. Okay, it is a phenomenal tool exclusive to Trendspider. I love raindrop candles. I love it. I absolutely love raindrop candles. And yes, I use them. On weekly charts, I will typically go to raindrop candles. I don't show them on here a lot, but it's just one of those things that I absolutely love Trendspider for. And that's why I think you should take advantage of this sale. $54 a month for Trendspider. It is phenomenal. And again, raindrop candles, just one of the things that I don't show a lot on here that I do use, but I don't use it a lot. ChatGPT, the visual scripting, I don't use it a lot, but I do use it. I love it. There are so many benefits to Trendspider. Now, let's talk about this. Top small cap stocks from Morgan Stanley following the group's upgrade to neutral. They had a sell rating on the S&P 600, RTY, the Russell 2000 RTY. I'm still not a big fan of small caps, and I'm still not very versed in small caps. But when I look at this, and you look at these top ones that are in the small cap sector, Antero Resources for energy, real estate, Agree, American Healthcare. Do your research and understand what these companies do. Understand the earnings of these companies, how they do compete with competitors. But it's a good list to start with for somebody like me who doesn't know about it. That's the benefit of having Seeking Alpha, is I can look at the quant rating. So for instance, let's just take a look at an industrial. I don't know anything about industrials. Well, let's do consumers. Chewy, a great example. I know nothing about Chewy other than I've ordered from them in the past. I can take a look at this. It's down 4.72% yesterday. It's down in pre-market about 1%. It is a top pick from Morgan Stanley. Why is it a top pick? Well, let's look at the valuation. They have a high PE of 31. But when you look at their growth, their PEG ratio is 0.49. That indicates to me it's pretty good. When you look at the growth, their revenue growth, 4%. The sector's growing at 2%. When you look at their levered free cash flow, they're losing 21%. So they're spending a lot of money to get that revenue growth. That's what that means. When you look at profitability, they have a 28% gross profit margin. The sector, 37%. What sector are they in? Other specialty retail. So I like this dot list. Look at Wall Street, because Wall Street's got 29 analysts that cover this. Their average price target, $31. And if we look at this, yes, it's been brought down with the stock. But I would argue that I've ordered from this one in the past. If I loved the service, if I thought it was fantastic, I would buy it again. Here's my experience with Chewy. I can get it on sale, but they discount me the only time I buy it is when they send me a huge discount. It's so much easier for me to just press one button and order from Amazon. and I know I'm getting it in 2 days. Now, Chewy, they do FedEx, so I know they pay more for their delivery. It's a little bit more reliable, and they have better products for my dogs. I know that. But I typically don't buy a lot from them. And then I always have to load up my cart because to get free shipping, I have to load it up. I get free shipping from Amazon. So would I buy it? No. But at least I can look at it that way. And that's why the top small caps from Morgan Stanley, good to look at. Now, we talked about Costco yesterday having a 100% win rate in the month of November. Now, in this article, Target fires off sweeping round of price cuts. They're trying to lure in buyers. Now, in the quant, it's a strong buy. Wall Street says it's a buy. We'll take a look at those. But what I wanted to point out in this article that I read was the National Retail Federation forecast that winter holiday spending is expected to grow between 2.5 and 3.5% year-over-year basis. The economy remains fundamentally healthy and continues to maintain its momentum heading into the final months of the year. The holiday forecast is consistent with National Retail Federation's forecast that annual sales for 2024 will be between 2.5 and 3%. The one major factor with this year's holiday shopping season is that the period between Thanksgiving and Christmas will be 6 days shorter, totaling only 26 days. That's usually tough on retailers, but when you look at Target and we take a look at this, it's trading at 150. Okay, we can see the valuation, not bad. Their PE is at 15. When you look at Walmart, when you look at Costco, they're closer to 50. I think Walmart's 26. I think Costco is 50. You look at the PEG, they're still growing, and they're growing fine. The PEG going forward is a 1.43. It's a little bit elevated. Look at the revenue growth. This is where the comps come in, and they did so badly last year that they could actually, if they're able to grow, they could do a comp where it just looks incredible. Profitability, 28%, but when you look at their levered free cash flow, it's 3%. It's still good. Net income margin, 4%. Return on total assets, 8%. Cash from operations, $8.56 billion, where the sector is doing $774 million. Cash per share, they're gaining cash per share $7.58. The sector's gaining $1.50. So the quant has it as a strong buy. When was it a strong buy? It was at 147.29. So you're not far off from there. You're only trading at 150. What does Wall Street say? Wall Street says it's $174 target. And that's 15% upside. And they haven't upped it as it's traded sideways here. They haven't really brought it down. When you look at the revisions, okay, 25 earnings per share up, 4 down. Let's go and take a look at this in the 4-hour algorithm because I have owned this in the past. I got out of this. Okay, in 23 days, you had this nice 23% move. Since then, since those earnings, you've moved sideways. Their next earnings, November 19th. The MACD reset itself. The RSI down at 38. It's not bad. Not bad at all. So again, Target may be an opportunity. Take a look at the weekly. When you look at this, it broke down from that big move that we had. It broke down and it isn't even close to this. You're going to use that 200-day at 176 as resistance, but that's a 15% move from here. I mean, it might be worth taking a chance. So if we look at the seasonality of Target and we go, because that's what we looked at yesterday, we can go back to 2014. Look at November, 76% change, but the mean change, 6.37%. So you have a pretty good chance with Target. Again, if they're going to lure people in, if we're going to have a good earnings season, this one may make sense to actually look at. So let's talk about earnings. GM, we can go to Earnings Hub. I'm going to pull up Earnings Hub. We'll go just use this. We'll use this one. Earnings Hub is my favorite place to go to look at earnings and things of that sort. GM reported this morning, and you can see that the call's going on right now. They did beat. Revenue was up 9.37%. Earnings per share up 21%. Rose on that. The earnings were good to push it. China was a concern. So let's take a look at the stock right now, how it's trading in pre-market. In pre-market, you're at that 50 mark. You're up 2.71%. It's right against that resistance level. But like I brought up yesterday, the algorithm had you in. It looked weak. I think it got down to 47 in pre-market. We can look at the pre-market right here. We can look at this and we can look at 5-minute. Let's look at the 5-minute pre-market. You can see right here, it did get down at 8:55 right before 9 o'clock. 8:55, the low was 48. I think that was a buy because I can obviously see this one. But it's trading all over the place and it's heading up. I think you hit that $55 mark that we talked about. You know, I think the analysts have a $55 price target. I think that was good. But you can see that one beat. Lockheed Martin beat on earnings per share, but missed on revenues. But they raised their guidance. They said demand is strong, which is, as a peace-loving guy, I kind of hate. But again, they said demand is strong. This one's at 607, which is down 1.24%. The only reason this is down is because it's up so much. The only reason this one is down. That 9-day is at 589. I'd kind of look at that as your support level if this one pulls back. Everything was good on this one. And you can't, I mean, this one, again, with the Middle East, with Ukraine, Lockheed Martin, and demand is strong. Bollinger Bands are wide open. The 50 days moving positive, 200 days moving positive. You don't have a hell of a lot of volume up here. That's the only thing that I would worry about if we pull this in, because most of the volume has been buying at that level back there. Let's say we're going to pull this. Let's pull this back. We'll go back to the beginning of the year, because if we go back to the beginning of the year, that might be a good shot here. Still don't have a lot of volume. Look at where everybody was buying it. Most of the people were buying at the beginning of the year. If you pull this up to where it broke out right before, that's where you're seeing the volume. So if you pull this up to mid-July, you're seeing a nice little support level at 572, and you're seeing a volume spike here between 600 and 615. So maybe that makes sense. RTX, which is RTX, again, an industrial. This one, they beat as well. We can look at this one. With quarterly profits, higher earnings guidance. It rose 2.2%. Let's see what's up right now. 1%. It's up 1.67%. Hey, that's a good one. You know, some of the other ones that reported, you can see some of the ones after the bell. You've got Texas Instruments. You've got Canadian National Railway. You got Baker Hughes. You got all this stuff coming up. Tomorrow morning, you got Coke. You got Thermo Fisher. You have AT&T. You have Boeing tomorrow, which is formerly of the core portfolio. You have VRT. Okay, one that actually did just report, Verizon. This one is pulling back 3.5%. And I would argue that the only reason this one is pulling back is because it's been up so much. Look at that run from 39 all the way up to 44. Now it's pulling back in pre-market. It's at 42. I would look at probably 41 being your support level on the 200-day. It hasn't run that up that much that it's crazy to think that this one can get back to 50. But it's clear. We talked about, remember the chart that said lower lows and lower highs? That's where this one has been for a very long time. It's turned the corner. Is this now a bull? Well, you're seeing it right here. For 4 weeks now, you've been using that 200-day, which is downward trending, as resistance. In order to get to 50, it needs to turn that 200-day into support rather than resistance. Your 50 days moving positive. Do I think that this one's a good one? Honestly, it doesn't fit my profile, but, and I'll put this out there, it currently pays a 6.2% yield going forward on its dividend. The kind of rumor about this one is, hey, it's got to lower that dividend. They haven't. They've consistently paid it out. And the problem is that, again, they can't keep up their earnings. If you pay that much out, you're not reinvesting in your actual products and services. So I like that it's got a 6.2% dividend. I wish I would have bought this in the 30s with a 6% dividend. But again, this is a long-term play. I don't know. It's a race to the bottom. I do have visible phone service. If you want visible phone service, that is through Verizon. You can sign up for it here, save $20 off your first month. I don't own this stock. It's just an interesting one. Now, one that beat and upped guidance, which is what you're going to need to do this, is 3M. And we've talked about this one having this resistance at 130, and that 130 was back from here, and it was resistance. It's now turned into support. Here in pre-market, you're up 5% at 140. If you look at a weekly chart on this one, where did I get the 130? Well, it kind of used that a couple of times here as its resistance level. And then you can see here how it's turned it into support twice. Okay, this candle, the low 133. This candle, the low 134. This candle, the low 135. So maybe it's a little bit above 130, but again, that seems like support. The MACD, super high on this, totally overbought. RSI's at 72. But 3M, they beat and they upped guidance. I think that 130 is still a low support, but I think it's quickly turning 140 into its new support level. And so that's one to watch if you have 3M. The chart shows old resistance at 130, but I think it turns that. Now, GE beat. GE Vernova? I think it's GE Vernova. This is GE Vernova. No, we're going to go over that one a little bit because they have earnings coming up. But GE beat. Revenue missed. Now, this one, the revenue missed. This one is down 5%. The reason it's up so much, take a look at this chart. The only reason this one's pulling back is because the revenue missed. Do I think it's going to come all the way back? I don't think so. But this is a great stock. Again, the valuation isn't crazy on this one, not with their growth. The PE 50, but the PE the PEG going forward 1.43. Their growth, you can see their revenue growth 44%. That's crazy. Levered free cash flow 18%. Profitability 22% profit margin. 22% gross profit margin. So it all seems good with GE. It's just pulling back because the revenue's missed. I wouldn't worry about it. FCX, this is Freeport McNamara, a materials company. This one shot up. This one in pre-market, it is up 2%. They beat on both revenues and earnings per share. They have a golden cross right here, up 2%. I would argue that you're probably going back to 51 or 52. If we look at a weekly on this one, it's just trading sideways. Look at how that one's going out. Is this the start of the multi-year breakout? Like we've seen from Palantir, like we've seen from Goldman Sachs, like we've seen from other JP Morgan, Morgan Stanley. We've seen from other places. Is this the breakout that we've been waiting for from multi-year? Do we finally get out above this and use that 47 as support rather than resistance? Again, interesting one. Now, a couple of them that are coming up, and we're going to go back to Earnings Hub so we can look at this. But GE Vernova, they got a new bull at Deutsche Bank, an outlook with robust power. This is the spinoff from GE. I like this stock. The quant doesn't cover GEV, so we can't necessarily look at it, but we can look at this one from a standpoint of valuation. They're not making money, but they're soon going to. We can look at the growth. They don't have revenue year over year. It's up 12%, but it's a new company. There's a lot that needs to go right for this one, but it's power. This is like this is like the VST. VST is up this way. This is GEV. Look at this stock. Now, for the last 7 months, it's only been out 7 months. You've had 5 positions in the algorithm. But the algorithm has you in at 175. Okay, you're 276. 276. Their earnings are coming up on October 22nd. If we go over here and we look at this, let's see, October 22nd. Is it? Let's look at GEV. Did they already announce? Let me see. Where is the search? There it is. GEV. We're going to look up GEV. GE Vernova. 8.8 estimate, 38 cents per share. Earnings per share last time, it was $1.01. Look at that chart. And they're expected 38 cents. So I like this one. I like this one a lot. I think it'll be a good one. I like, again, if there's any pullback, what do my notes say on this one? If there's any pullback, just buy it. GE Vernova. I think I have that one. Yeah, GV. This one's been on a run. If there's any sell-off on this, buy the dip. That's what I wrote. Now, VST reports before the bell tomorrow. I'm sorry. Or no, in correlation. I always get VST and VRT. VST is the power is also one thing. This is one that has gone higher, and it's just resting. It's literally just resting. It's pulled back, and it's sitting here at 128. Their earnings are coming up November 6th. This is one that's where the MACD is resetting, and it's just trading sideways. So you're seeing some divergence there where this one's really going down with the RSI going down. This one's just trading sideways. I'd argue VST, probably not a bad one, just like GEV isn't. VST, we can look at this one. It's a hold because of the valuation, the revisions, they're bringing it down. If you look at Wall Street, their average price target 139, so it's 6% upside. To utility, GEV, same kind of thing. I think GEV, when you look at the Wall Street analysts, there are 24 analysts that cover it. They say it's worth 269. If this one pulls back, just buy it. If this one pulls back, just buy it. VST, same thing. Now we can look at Tesla earnings are coming out tomorrow. This is the big one that other people, VRT tomorrow. This is one that I own. I think this one's fine. Again, I'd argue, that their estimate earnings per share, not super high estimate, 67 to 69 cents, 1.98 billion, 1.94 billion, 1.95 billion reported last time. It's gone, you can see the price of this one. Look at the chart. It's gone a little parabolic. Year to date, it's up 133%. I think I got in at like 80 something, 90 something. It's at 110. It's a good one. I've held this one. But Tesla, if we go and look at Tesla, I would worry a little bit about Tesla. And the reason I would worry about Tesla is this came out yesterday. 0% financing. They had put 0% financing only if you ordered a Tesla and you ordered full self-driving, which was an additional $8,000. Okay? They are now saying you don't need to get FSD in order to get the 0% financing. I think that's a desperate sign that demand is down right into earnings. And when you take a look at their earnings, earnings here, okay, the estimate revenue, $25.52 billion. What'd they report last time? $25.5 billion. Earnings per share, 61 cents. Earnings per share last time, 52 cents was reported. Okay, they missed. They missed by 16% last time. I think you're going to see something similar. This does not scream to me like they're selling every car that they make. The only thing that could come out is that they're actually, it's costing them less on the cars and their margin went up. But the chart is weak. The actual demand in my mind is weak. I just don't like the setup into tomorrow. So how could you play this? You could buy TSLQ. Let me just reset this real quick. This one goes on like this every time I'm on for a while, and I just restarted. So 4-hour algorithm. Let's look at Tesla. We'll run this one in the core portfolio. I don't like this one, but the inverse ETF right here. Okay, so the algorithm got you out nice 10% gain, and it's been right. You got a nice gap down right here. The robotaxi event, it missed. I loved it. It missed on Wall Street because nobody thinks that it's coming to fruition. You've got a MACD cross-up that's going on with the RSI at 29. You could not be heading into earnings with lower expectations. But does that mean that the stock is down low enough? No. Look at this. Your weekly, you're still at 50 on the RSI. I would say that 260 is your first resistance level. But if we bring this one back a little bit and we extend it out and we look at these weekly candles, you can see right now that looks like about 230 is your 200-day. And it's provided resistance. It's provided some resistance. I think you have further room to go down. And the reason I think you have further room to go down is just the valuation. At some point in time, valuation matters. Now, Wall Street says it's a $210 stock. There are 48 analysts that cover this. 48. That's a lot. When you look at the valuation, their PE is 93. I would rather buy Costco, which is growing at 30%. Okay, growing their revenue 30% at 50 times. Then Tesla, who is growing their revenue at 1% and has a 90 PE. I'd rather buy 2 shares of Costco at 50 PE, forward PE, than I would Tesla. And it's not because I don't believe in Tesla. Tesla, I own a Tesla. I love this car. I believe in full self-driving at some point in time, just not now. So what would be the play? It would be TSLQ or TSLS, one of these double leveraged ETFs. I think that is probably the play. Now you got a little gap down here, but when you're talking about these double leveraged ETFs and things, I wouldn't necessarily worry about this gap. The algorithm has you in at 1830. Now, mind you, this again, because the algorithm on the Tesla, on the 4-hour algorithm on Tesla works so well, and it has you out, doesn't have you in, it might get you in before earnings, but I would argue, don't get in. You win 48% of the time. I would argue this one might be one of those where you actually miss on the downside. The algorithm makes you 170% versus if you bought and held for the last 2 years, you've lost 2%. It's only 21 trades. So this one works really well in the 4-hour algorithm. And because that works so well, TSLQ works as well. You make 42% in TSLQ. If you bought and held TSLQ because you thought Tesla was just never going to go up, you're down 48% over the last 2 years, 24 positions. You win 42% of the time. I would argue that this 1830 got you in and it hasn't gotten you out. Bollinger Bands, they're cinching up a little bit. They're not going to cinch up before earnings, but I do like the TSLQ play versus that. Now, 10 days until Apple's earnings, okay? Apple is sitting 1% below all-time highs, positioned at the apex of an ascending triangle. With 6 weeks of TTM squeeze, a volatile move might be right around the corner. Question is, this is a squeeze indicator, okay? Lemon squeeze. Is this going to be up or is this going to be down? The way Apple has made their stock price go up is through buybacks, okay? That is how Apple stock has soared over the years. You're sitting right up there at 232. I sold a bunch at 230. We went all the way to like 237, 236. Yeah, 236, 62, I guess is the high. The valuation is nuts. Do I expect this one? You're again, it's next week. The valuation 35. This isn't Tesla's valuation, but the growth is worse than Tesla. 0.43% year over year. Their leveraged free cash flow, they're losing 6%, but it's still billions of dollars that they're making. So I don't worry about this one. Will it pull back? I don't know. Wall Street, they have what, 47 analysts that cover this. Their average price target, 240, 3% upside. So I like this one. I like it a lot. From Spotify, Cillian. Hey, Gary, would like to hear your thoughts on HPE. Seems undervalued, reasonable growth potential. Great show. HPE. Let's look at HPE. HPE. I like this stock. This is kind of in the Dell, the SMCIs of the world, blah, blah, blah. They do server stuff. The valuation, it's fantastic. The valuation, you got 10 PE. This is undervalued. Your PEG ratio, though, is 2.92. And the reason is the growth sucks. The growth just sucks. And it's horrible. It's horrible. That's where you've got to worry about this one. Now, momentum, it's a B+. Your short-term performance is down 3 months, down 2% in 3 months, but you're up 18% in 6 months. 1 year, you're up 31%. So you can argue that it's great. Revisions, they're bringing it up. Let's look at Wall Street. 18 analysts cover this. They rate it as a buy, but it just turned to a buy. The quant says it's a hold. The average price target, 21.26. You're trading at 19. So it's about a 7% upside. And let's look at the chart real quick. Let's see what the 4-hour algorithm does. 4-hour algorithm makes you 46%. Buying and holding makes you 56%. So I'd take it as kind of an entry. And if you wanted to trade it, trade it. It has you out right now. Nice gain. Nice gain. I don't know. Can't really read the gain, but it has you out with a nice gain. Their earnings are coming up, it looks like, here on November 26th. So, again, this is SMCI. SMCI and Dell, I believe, report before HPE. I don't think it's a bad one. I just think you have to worry about that growth. And the growth scares the hell out of me. And I personally own both Dell and SMCI. I think both of those are just set up better. And so that's me. But Cillian, I don't know enough about the inner workings of HPE and the business to actually say, oh my God, yeah, they're changing it around. They could. You look at the weekly on this one, and you've got a positive 200-day, positive 50-day. You're trading, your all-time highs are right back here in July, mid-June, which is 22. It got to 22. So maybe they come out and they kill it. Again, this is part of the AI story. Fisher from Spotify. Is Wolf announcing a new GLP-1? This is WULF. This is the crypto nuclear miner. I mean, they're just in on the hottest trend, and it was all over Twitter. And so yesterday, this morning candle, it was up 16%. 16%. Now in pre-market, you're down 2%. This is one that you trade. It just got too hot. But yeah, my response back, never say never. I think Drug is announcing a small nuclear reactor. If you didn't know, Drug is one. This is the psychedelic one that was up 2,000% since I brought it up. And it's still up. It's up at 43. It got all the way yesterday to 79. I'm sorry, last week it was at 79. Yesterday it got to 62. So it's still moving. It's still moving. It's crazy. It's a momentum play. You can trade it on the 65-minute, which has actually done really, really well with it. From Spotify, John Pelham. Hey, man, Huma. Can you check out Huma? Is this Humana? This is Humasite. I don't even know what it is. Let's look. Humasite. Algorithm makes you 239% versus 52% buy and hold. I look at a weekly. It doesn't have a 200-day. Yeah. I don't know what you want me to say about this one. It's a strong buy from Wall Street with 6 analysts covering it, and they give it a $13 price target. So 6 people think that it's 142% above. It's biotech. So if you go and you look at the valuation, they're not making money. You know, the quant says it's a hold. If you look at their growth, let's look at their growth. Minus 100% on revenue growth. Their expected growth, 127%. It's new. You know, I don't know what you want me to tell you. It's you know, they don't have a 200-day. It looks like it just IPO'd back here. Looks like it came off a SPAC. So I don't think it's anything, John. I think you can trade it. I think you go and do that. Scans, we've got a bunch. Roblox in the core portfolio, it's back above 40. It's up 3% at 41.65. Hopefully you bought it at 40.31. Again, it got down below 40 for a slight bit here, October 21st. Just yesterday, it got to 39.46. So maybe you bought it. It's got to buy here at 40.31. You're trading right now at 41.58. It's up 3%. Hopefully you got it under 40. That was one that I've said clear. MicroStrategy. This one's down today, and I don't know that I necessarily would buy it here, but it is showing, again, a bullish move. It's down 2%. Bitcoin has run. This one is an interesting one because they have earnings coming up next week, October 30th. I'm in this pretty heavy, to be honest. I've added this one several times since it's hit that support level about 126. I'm all in. I mean, honestly, I'm all in. I believe in Michael Saylor. I think he's got a good strategy there. You are overpaying for the Bitcoin holding, but you don't know. Maybe they bought a ton of more Bitcoin. So it's interesting. Gets an entry. Another one that's been a high flyer that just got another entry is AppLovin. Now this one on this current run, you can see you're up here at 65%. the MACD kind of reset itself. And again, since my algorithm is based on the MACD, kind of reset itself and moved up. You make 716% over 24 months on this in the algorithm. You make 725% just buying and holding. Now, the algorithm tells you to get in here, but because it's already got a buy in here at 97, you're not going to see the entry. It's just on the scan, you're going to see another entry on this one. So it's interesting. Again, we have GCT, we have GE, which just reported. GE has an entry. The market just opened up about 15 minutes ago. You're seeing a nice little down move on GE. This one had a nice MACD cross up right before yesterday. The algorithm got you in at 166. Most likely, algorithm might get you out, even though it has you in with another bullish move. This is why the bullish moves need to be analyzed on the chart. So when the algorithm gets you in and then you do a scan and it says, ooh, you should get in right here, you need to look at the chart. Would I have gotten in right before here? Probably not. The Bollinger Bands are cinching the weekly. They're expanded. So I don't know that it offered a great opportunity. That's not an A+ setup. If you're already in this one, it's not A+ to add to it. Wait for the pullback. I do think that this one on a pullback probably deserves to be bought. This is just a high-flying stock. If you go back and you look at a monthly on this one, look, you're just getting back to where you were in 2007 when the housing crisis hit. That's it. You're not even back to your highs of $262, $264, where you were in 2000, where this one was just overblown. They talk about Cisco and stuff. GE was just as much a bubble. This is one of the nifty 50. So it's just coming back. Good management has turned this one all the way from 54 back in January of 2023 all the way up to close to 200. So if you have any questions, hit me up on Linktree. Again, Trendspider's there. Remember, it's the last day for several. You have several options. You can bundle up with Seeking Alpha and Alpha Picks. That's what I suggest, or get them individually. If you don't find the need to have a portfolio, then just do Seeking Alpha. But Alpha Picks, the portfolio, the return is what's great. And again, I'm going to be setting up that portfolio on Friday. I'm going to do it. I'll probably report to the paid newsletter subscribers on Saturday how that went. That's probably what I'm going to write about this weekend, is just, hey, we set this up. We did this. We did that, blah, blah, blah. We set up this portfolio. And as long as I don't sell Alpha Picks, I think I can talk about the portfolio I set up. So it is what it is. Okay. I will talk to you guys tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.